Yes, the thing is, the Bitcoin now is on an ending diagonal. It's on an ending diagonal. So that's just what it's doing now. Let me show you where the ending diagonal is on a 4-hour time frame. This is the ending diagonal. You can see it. You can see it. So that's how I took my trade. You can see that over here on the third wave, you can see that the thing has touched the resistance line, diagonal resistance line, which is here. You can see it on a 4-hour time frame. This is it. So this is actually the best time to enter trade. But before you enter trade, make sure that you wait for a reversal. You go to a smaller time frame, the 15-minute time frame. Go to a 15-minute time frame and check where it breaks a structure. If it breaks the structure, you can see this white line I drew here. This line I drew here is the previous low, and it has broken it, so it will come back and retest. You can see this other block that I put here, this blue other block here. This is where there's a demand zone. This is a demand zone, and people, most times, once it has broken this line, they tend to enter the trade quickly, which is wrong. It's very wrong. So you wait for it to retest, come back, allow it to come back here. If you want to see the other block very clearly, you can go to a 5-minute time frame, so you can see it clearly. You can see it clearly. Wait for it to retest, and you can see my moving average. The red line is the 200 moving average, and the gold line is the 50 moving average. While the gold line is the 20 moving average, while the purple line is the 50 moving average. So you can see they've crossed each other here, and they're about to cross the 200 moving average, which is a sign of a downtrend. Bitcoin is going down. Bitcoin is going down. It will go down to almost 57. Let's see it on a 4-hour time frame. You will see where it is going to come down to. To come down to this level, you can see my TP, where I'm taking my TP down just below this. You can see where I'm going to take my TP at the bottom here, and that will be wave 4. That will be wave 4. Wave 4. You can see where I put my wave 4, somewhere around here. That's where it's going to come to. It's going to make 5 waves. 5 waves. It's going to produce 5 waves. So after the 5 waves are completed, then the real direction will appear. So for now, this is an ending diagonal. Like I said, ending diagonal is an ending diagonal. So it's making a kind of triangular movement following this trend line, this up one and this one at the bottom, this line at the bottom. You can see it. It's called an ending diagonal. So I think this, if you check the higher time frame, like monthly and weekly time frame, you will see that it has been a long drop for a while. This is a weekly time frame. After making a wave of 1, 2, 3, 4, 5, the 5th wave, then it produced A, B, and this last one is doing now is the C. this wave C is always longer than A and B. If you don't understand what I mean by wave, it's called Elliott waves. The Elliott wave it has been very, very harmful for me. Elliott wave is one of the biggest and the best strategy you can, especially when you are going on a long trade, not scalpers. If you want to scalp, you can use Elliott waves. It will help you. Using Elliott wave and using Fibonacci together with it is perfect. Then if you know how to use your divergence too, it is just perfect, because for every strong divergence in a higher time frame, with your Elliott wave will determine a total change of wave. Like if it is on if it's on the third wave is always most times the longest, based on the rules of the Elliott wave. Most times people speak about break of structure, liquidity, and all that. So most times it's difficult for you to see people speak about Elliott wave. Elliott wave is one of the strongest strategy you can use in trading. Elliott wave. Elliott wave is one of the strongest and the best strategy you can use while trading. You can use it for any pair at all, whether altcoin, stock, to buy stock, and for all these pairs, other pairs, you can use it. You use Elliott wave for them, and this is what has been favorable. But the biggest wave will happen soon, because after this wave is over, the third wave, which is the longest wave that has never happened in the history of Bitcoin, is going to happen. This time around, it's going to go beyond $130,000. $130,000. So get ready to buy very soon after the end of this corrective wave. It's called corrective wave. This is a correction. A correction is occurring. You can see, let's go back to history. You can see after it formed the first wave, it ended. It came back and fell. If you remember, Bitcoin rised at the early state. It came. I think it got to about about 19,000 US dollars at the first time it came out. Then it now fell. After it fell, it went back and crossed 19,000 and went straight to 70 something thousand, or rather 69. I think 69 or thereabout. 69. Then from there, after that 69, it came down again to 19. People thought that Bitcoin was not going to rise anymore. Then it went up. So you see, that first one that it went to 19 was the first wave. Then it made a reversal. It came down, which that was second wave, a correctional wave. Then it went back up again and went to 69. That was the third wave. Then it went back again and retraced to about 40 something, and that was the fourth wave. Then it went to 100 and something thousand. That was where it got to. That was the fifth wave. Now it is making a correction. After every 5 waves, there will be a correction. After every major 5 waves, there will be a correctional movement wave, which is A, B, C. Let me label it here so you know what the A and B is. A, B, C is. Using the Elliott wave, you get to know where the A, B, C is. Look at it. You can see here now, it's written Elliott wave, Elliott wave, Elliott motive wave is the 1, 3, and 5 waves. The 1, 3, and 5 waves are the motive waves, while the correctional waves are is the A, B, C. A, B, C. Let me mark it for you so you see what I'm saying. This is A, this is B, and the last one that is happening now is the C. I use the yellow color to symbolize it. You can see it there clearly. So you have to understand what Elliott wave is. Let me bolden it. You have to understand what Elliott wave is. This yellow is this one here is the A, and this is the B. Then this C is about to end. That's what is happening now. C is about to end. That's why I called it an ending diagonal. It creates 5 waves. Inside the C, we have 5 waves inside the C. B is always A, B, C. B is always A, B, C. Just those waves, A, B, and C. Then in A, you have A, B, C too. But C, most times, always A, B, C, D, then E, or 1, 2, 3, 4, 5. Just take note of that. And most times, when the wave C is forming, it normally comes down to the wave 3, that occurred in wave 5 of the previous motive wave. So, and most time, if you use your Fibonacci to draw it, you will always find out that the Fibonacci for the correctional wave, the C is sometimes it stops at 68 points or 60 or 70 something points. Then let me draw that so you can see it, the correctional wave. Let me remove all these lines so that it will be easy for you to understand what I'm saying. Let the market be clear. We are just waiting. We are waiting. The biggest problem in trading is waiting. Patience. People don't have patience. Wait. We are waiting. We are just waiting for it to end. Then we enter the trade upwards. So the day it's going to happen, I'm going to be here online live. So subscribe, like. I'm not asking for money. Just subscribe, like. When it starts, you enter a long trade that will take you for weeks and months and make a serious profit in Bitcoin. It's going to happen. This wave, don't miss this wave. This wave will be the biggest out of all the waves that have been happening. This time, Bitcoin is going to rise. If possible, it can get to 160. It can get to 200,000 US dollars. And that will be wave 3. Then after the wave 3, there will be a reversal. A wave 4 is going to happen. Wave 4 is always a short wave, and it takes time. It's always slow because it does a lot of consolidation. Sometimes it becomes a range. Sometimes it falls down very fast, but most times it's always slow. So that's wave 4. Then after wave 4, then wave 5. This thing I'm saying now, wave 2, wave 3, wave 4. Look at how long it took wave 1, wave 2, and wave 3. This is wave 3 now that is happening. That's A, B, C is wave 2. Then the wave 3 that is going to happen will take like a year or 2, 3 years before it is completed. That's how big, that's how massive it is. This is a very long way of forecasting and knowing what is going to happen. Sometimes you see people come online and say Bitcoin is going to rise in the next 2 years, 3 years. It's going to rise to so and so number. You'll be wondering, how did they get that? It is Elliott wave. Elliott wave will help you understand these things, these movements. Elliott wave will help you understand the movements in the market. Those top traders that don't even make noise, that don't say anything, that's what they use. Elliott wave. But most of other people is just break of structure, other block, liquidity, and all that. Those are also good, but they are not. If you don't know Elliott wave, you will be guessing. You'll be guessing. I'm telling you clearly that this wave downwards is going down, but this wave downwards will end very soon. Can end very soon. So you can see there's a triangle in a triangle. A triangle in a triangle. Like I said, it broke this structure. It broke this structure, this white line structure here. This line, it broke it now here. So this is a 15 minutes time frame for an entrance, an entry. If you want to take an entry now, you will hold on, wait for it to break this line upwards to retest that line. To retest and break it and touch the other block before then you can enter a trade. Then you can enter a trade. Mind you, Bitcoin and Ethereum always move alike. They move in the same direction, the same pattern. Bitcoin and Ethereum always move in the same pattern. Most times they move in the same pattern. And if Bitcoin is going down, Ethereum will go down. If Bitcoin is going up, Ethereum will go up. These things, you just have to understand them and know which to trade. Depending on your account. Ethereum and Bitcoin, they move alike. This is Bitcoin. If I show you Ethereum now, you see, just picture this image here on this Bitcoin. Let me go to Ethereum so you see what I'm saying. Ethereum, this ETH. You can see the same thing, but in Ethereum you can see the 200 moving, the 20 moving average has crossed the 50 moving average. You can see that this is where the it broke structure. It broke structure here. So it has to go up and touch this other block here. There's another block here. This is another block. Another block is a place of supply where the market has, where there is much money for that. The sellers are here right now. That's where the other block is. This other block. Then the fair value gap is in between. this space between two candles separated by a longer candle. You can see, let me zoom it very well so you can see it very clearly. You can see a space between. It's called a fair value gap, FVG. It's called a fair value gap. So anytime a market leaves a space like that, just know that that market must go back and retest and cover up that space. And sometimes it will cover the space and even go beyond and touch the other block. And mind you, for you to get a perfect order block, always use a higher time frame, because sometimes you see that this order block, you will see the thing will spike up and produce a wick above it, and you'll be wondering, why did it cross this order block like this? It's not supposed to cross, and it will cross and do a sweep of liquidity. It will sweep liquidity upwards and take all their stop loss, all the people's stop loss. So most times I don't advise people to enter trade when it gets to your order block. Wait for a confirmation first. A confirmation. If there's what they call morning star, shooting star, there's what they call hammer and engulfing candle, especially the engulfing candle. Once you see an engulfing candle if you see an engulfing candle on an order block or a place of supply or a place of demand, then you know there's a perfect entry point. Wait for the candle to form first. Wait for the candle to form first. Then the second candle that follows it, wait for it to break the engulfing candle where the engulfing candle ended. When it breaks it and go back to retest, then you can enter a trade. The truth is that engulfing candle doesn't work all the time, but 85% or 90% of time, it does work perfectly well, especially when you pick it up at a place of demand or supply. An engulfing candle is one of the perfect signs for reversal. Then another perfect sign for reversal is an engulfing candle. Engulfing candle, shooting star, then divergence. Divergence are two lines going in separate direction, never to meet. When they are facing two different directions, never to meet, then you know that there is going to be a reversal. And most times, all these symbols, all these signs, if you get them on a higher time frame, from 1 hour, 4 hours, a daily time frame, you get all these signs. It's a perfect way of making an entry. So let's go back to Bitcoin. Let's go back to Bitcoin and just show you that Bitcoin and Ethereum have the same pattern of movement. Bitcoin and Ethereum have the same pattern of movement. If Bitcoin is going down, Ethereum will be going down. That's ETH will be going down. So understanding the market, you have to be very observant to understand the market perfectly well. You can see it's touching this. That's touched this line that broke structure here. Broke the structure. So I'm expecting it to still go up, and touch this other block, then come down. So that's how to trade. You wait, be patient. Patience is very key in trading. Patience. Don't do revenge acting. If you enter a trade and you lose that trade, Study why you lose the trade. You keep losing a trade. You keep losing a trade. Every time you lose a trade, every time you lose a trade, you'll be wondering, why am I losing this trade? You entered a trade for sell and you lost the trade. And you know that the trend is actually a sell trend. It's a downtrend. It's a bearish trend. You keep on entering for bullish just because you want to catch a short bullish trend. It will not work. It will not work. You keep losing your money. You keep losing your money. It will not work. If you enter a trade, once you enter a trade and the trade you enter is not in alignment with the trend, and if you enter a trade and it's not in alignment with the trend, that is, you check the higher time frame and know the trend, that is whether it's an uptrend or a downtrend, that's bullish or bearish. You check it, not like when it's going up, when it's supposed to be bullish, you know it's a bullish trend. You will be looking for a sell, looking for how to catch a small sell. No, now you can't go against a trend. If not, you will be setting your stop loss. It will be cutting your stop loss. It will keep cutting your stop loss, and your stop loss will become like a daily contribution you are doing to the platform. You will just be cutting your stop loss. No matter how small the dollar is, you keep cutting it until your money in your account is off. It's finished. Then your eyes will now be clear. And there's what I always tell people, all the people I teach this. I say, always learn how to protect your capital. When you have gone into profit, enough profit, always learn how to move your stop loss from negative to positive. Bring it into profit, not too close to your to the to where the look for a break or structure, the lower low, depending on the if it's uptrend or downtrend. Look for a place there and put your stop loss. Let me give an example with this my trade now. For example, now I already know that in this 15 minutes time frame there was a break of structure here. There was a break of structure here, and it came back here at this point up here and touch this other block here. Let me show it to you. It touched this other block here. It reacted to this other block here. You can see it. It reacted to this other block here. Then and reversed back down and broke this structure here. Now the best place now I can put my stop loss. I can now take my stop loss from up here, and draw it down above this other one, because I know that it might not, it's the possibility for it to come here is less, very, very less. So that's how I move my stop loss into profit. Why? Because sometimes you might be on a trade and you feel sleepy, and you won't know when you slept off because you forgot to check where you forgot to even put a stop loss in your trade. Most times we do it a lot. We forget to put stop loss in our trade, and because you want to take your profits by yourself without putting a stop loss, then you forget and you sleep off. When you now sleep off, when you wake up, your account is blown out to 0.00 US dollars. You can see that. So sometimes the best thing you do, most times, if you enter a trade, put your stop loss instantly. As you are putting your stop loss, put your take profit. Know where you are going to. Know the destination you are going to. Like me now, I know where I'm going to. I've already put my take profit at the bottom. If you go to a 4 hour time frame, you will see where I set my stop loss, take profit. By take profit, set your stop loss, set your take profit. It's very, very important. In fact, I will even tell you to set your take profit first, your stop loss first before your take profit. Most times it's greed that make people fail in trading. Greed. Know your destination and don't make your destination look impossible. This is where I'm taking my profit. If you're entering a trade, check your lot size. Your lot size should depend on your kind of account, the kind of account that you have. If you have a large account, fine, you can take a reasonable lot size that will not affect you. Not like when you take a big lot size and the trade start going against you, your heart to start pounding. You have to start pounding and you'll be worried. You'll be feeling bad. Before you know, you'll be praying and say, oh, let it go my way. Let it go my way. Or let it go up. Let it go up. Maybe you took a bullish trade. You say, let it go up. Let it go up. It doesn't respect that. The market has principles. You cannot be praying and be saying, oh, let it go my way. Let it go my way. There are principles that governs this trading. First of all, check your strategy. Make sure everything is going well for you, and always use what works for you. If it has worked for you once, twice, 3 times, 4 times, stick to that trade pattern. Don't jump from one trade to another pattern, from one oscillator to another moving average to trend line to Elliott wave. You just keep jumping from one place to another. Look for a pattern that suits you, and look for a pair that you understand very well. Look for, just like say you are looking for a woman that you want to marry, or a girl, or a woman that is looking for a man that wants to marry. You look for someone that understands you perfectly well and someone you understand very well. Not like you now look for a pair, then this one, because you have lost here, you now get angry with this one and go and enter another pair, a pair that you have never traded before, and you don't understand his movement, because most of the pairs, they have strange movements. You have to understand their movements. Like me, I don't even, when it comes to gold, so many people have lost money in gold. Even me too. I've gained, I've lost money in gold and all that. But I noticed that the movement of gold is so annoying. Just one movement like this, it can just clear your account. What's the essence of trading if it's not because you want to raise money? You want to make money from it. The reason you are trading is to make money. The word trade cannot be explained without mentioning money. You must mention money in trading. Value. You want to gain value. That's why you are entering a trade. There's a way you trade. To show that you are gambling. If there's a way you trade, you show that you are gambling. If you enter a trade, wait for it to get to the place of where there's demand. Then where there's supply, you just enter there and wait for it to go your way. Once it goes your way, move your stop loss from where you placed it before. Move it into profits and leave it there, so that in case you slip off while trading, you won't wake up in the morning, or after you wake up, you now see that your account is blown out. I just hope we understand this, because it's not just to tell you where to enter trade. I can just come here now and say, okay, now Bitcoin is going to go down. You have to enter your trade now. Enter now. No, I will not do that. I will tell you. I have to let you know. That there are some principles that you need to follow. Sometimes if the trade does not key, if it doesn't key in to your setup, don't enter. Wait for it. If you wait for your setup and it doesn't enter, If your setup, maybe you slept off or you went out and you came back before you looked at your system, you now found out that your setup has already happened. This setup has already happened, and no. I have to, I have to, I have to, I have to meet up. No, you don't meet up. Allow it go. Wait for another setup. Allow it to go. Sometimes you might have a good day, you might have bad day, and if you have a bad day, you should have this consciousness to know that today is a bad day. Have the consciousness to know that today is a bad day. Have a consciousness to know that today is a bad day, that this day is a bad day. I've lost trade twice. Just stay away from the market. Stay away from the market at that moment. Go and do other things. Go and do other things. There are other businesses you can do. Go and do other things. Then later come back when your head is calm, when the market's pressure has calmed down. Then you come back, analyze, use your strategy to analyze perfectly well before you enter any trade. If I want to buy, like I said, if I want to buy an Adidas shoe, original Adidas shoe, I will go to an Adidas store that is recognized, well recognized. If I don't know the place, I will ask question before I go. I live in Lagos, Nigeria. If I want to buy, for example, a Tokumbo, maybe let me just say an Okrika clothes. Those that understand what I'm saying, you want to buy a cloth that is used, a used cloth. There is a market I will go to. That will be cheaper. But if I don't know the market, I will end up buying it very expensive or twice or three times the amount because of information. Information is key in trading, whether digital trading or live trading or physical trading. Information is key. On this 4-hour time frame now, you can see that this range, this place now is where I am expecting it to break, because a break of structure on this 4-hour time frame over here is a big sign that the trade will go down to where I expect it to go. That's what is going to be. And here now, before this break of structure, there's an order block here. You can see that there's an order block here, and this order block is telling us that this trade will hit this thing. These candles might hit here and go back up. You can see the way it is coming down already. It has touched it already. This order block, it has touched it just now, and when it hits it, it will now do a reversal to the upside. This upside here now, there's going to be, it might create an FVG around here. That's what I'm suspecting it's going to do. It's either it does that or it just goes down, because this is a sharp fall. It's falling sharply. So if it goes down and breaks and disrespects this other block here and breaks this structure here, this lower low, higher low here, if it breaks it, then you know there's a change of character. It's called what? Change of character. A change of character, it shows, it means that the initial trend has ended. It means that the initial trend has ended. What was it doing from here? It was doing higher high, higher low, higher high, higher low, higher high, higher low, like that. It was doing higher high, higher low, like that till you got to this point. And at the top of this place now, it did a double top, which is another sign of reversal. It made a double top. Let me increase the color so you see what I'm saying. it made a double top, and a double top is a symbol, is a very strong sign of reversal in trading. Very, very strong sign of reversal in trading. You can see it. There was a double top made here at the top here. A double top was formed. So after that double top, imagine a double top on a 4-hour time frame. It's perfect. It's perfect. It shows that. And look at the double top now happened in my trend line. The trend line I drew, this white line I drew across that touched this place. It touched this, the mouth. It touched here, and it touched here too. It touched here, and it touched here too. You can see it. So now that double top was a sign of reversal. That's why I took the trade. I took the trade there. Then you see, then the candle now it has touched this other block here. So if you want to know where it's going to reverse back down, you go to a lower time frame, 15 minutes time frame. Now in this 15 minutes time frame, you can see this gold line and this purple line. The gold line and purple line that you see here is my 20 moving average and the 50 moving average. Let me show it to you. These are the 3 moving average I'm using. This one, you can see it here, 20, then this one is 50, you can see 50, then this is 200. Those are the 3 moving averages I use mostly. Now when someone sees this kind of movement, now you feel that the trade is going up, the trade is going to go up. Look at this candle, the green candle is forming, so you now want to come out of the trade. No, don't just rush into coming out of the trade. Don't do that. Now what's going to happen now? This might turn out to be an order block. This might turn out to be an order block, depending on what will happen with this green candle that is forming now. So let's see if it's going to produce an FVG here, because if you check what I said it broke structure here. It broke structure here. It broke structure here and came here and broke another structure here. So let's see. After it broke here, broke structure here, it reversed back up, came here and touched this other block here. There was another block here, a fair value gap here that it touched and reacted on this fair value gap. So sometimes it reverses at the point of the zone of the fair value gap. Sometimes it reverses at the zone of the other block. Now the next, so here this fair value gap has been mitigated. Now a break of structure happened here too. Now what do we expect? It's supposed to go up and touch the other block here, which it did already. Then we are waiting for it now to create a fair value gap here. That's what I'm expecting it to do, to create a fair value gap here. Let's watch. Just 7 minutes from now. Once you understand the movement of candles At least even if it is not 100%, you understand the movement of candles, the way, the characteristics of candles, candle movement. It will be difficult for you to just lose. At least just know about 70% of how candles move, how they behave first before you start entering any trade. Don't just enter trade like that. It will just look as if you are gambling. Don't enter trade like that. It will look as if you are gambling. So what you're going to do is you wait for candles to form. Sometimes you wait for a candle to form, one candle to form, to know where it's going to close and what kind of wick it's going to produce before you know the next trade you are going to enter. So I'm waiting for this green candle to form. Why did I call here a break of structure? Some people say it's for you to call a place a break of structure, it must have reasonable candles that it has formed. So I'm calling here a break of structure because the green, the little green in between the two reds didn't break this candle downwards. So it did. Yeah, so that's why I picked that place as an order block. If you go to a 5 minutes time frame, you see it that it's actually another block. You can see it. You can see it. There's a break of structure here. So this candle that is forming now, see, it has formed a reversal. This is a reversal sign. If it was up, you would have said it's a shooting star, but it's like a hammer. Now it is going to go up. Forget this red that is showing. It's going to go up and touch this blue bar that I drew here. That's where the other block is. It's normal. It's normal. So we're waiting for it to come and touch this other block. Once it touches other block, it will bounce back down. We're waiting for it. No matter the drama is doing down, just be patient. As long as you understand what you're doing, just be patient. After it has finished doing all its drama, it will come back and test where you know that it will always test. It must always come there to that zone that you have created. Just be patient. Now it's doing as if it is going down. Just watch that. When it's going down, like people will just enter trade and say, it is going down. It is going down. No, it's not. It will go up. It will go up. And some people say, wow, the moving average has crossed the 200 moving average. The 550 moving average has crossed the 200 moving average. That means it's going down. Before it will go down, it will cover up. It will have to fulfill its destiny. Its destiny is to go and cover up the spaces that have been left empty. Like I said, there's a fair value gap here, and the whole of this place is another block. The whole of this place is another place, a supply zone. So this guy has to go up. This green, this trade now has to go up and test there, then come back. Let's just watch. As long as here is a valid break of structure, it will do that. Except it's not a valid break of structure, but I'm 85-90% sure it will go there and test it and come down. I'm waiting for it. And if you check the zone below, you will see that there's also another block there. There's also another block here that I drew, this blue, this faded blue. There's also another block there. That's why it's even a certainty that it's going to go up and test this, come to this other block before coming down again. Simple Bitcoin, simple strategy, just a very simple strategy. Too many people make it so complicated. They make it so complicated. You have to draw like this, draw like this, do like this, draw like this. No, just look for a pattern that works for you. The break of structure, change of character is a normal strategy. It's not even to me. I don't even call it a strategy. It's a normal pattern of life. It's a normal pattern of life, which even human beings go through each day. If you wake up in the morning, you wake up and face the day's activities. Face the day's activities. Your energy is high. You walk and walk. Towards the evening time, you will find out that you get weaker and weaker. You go down. You diminish a little bit because you have stressed yourself. That's uptrend and downtrend. It's a wave. It's not a straight line. It's a wave. A wave is not a straight line. It's an up and down movement or a down and up movement depending on the direction. Our lives are like that. It's up and down, good and bad, negative and positive. A wave cannot be called a wave if it doesn't have up and down. So most times if you see a wave moving straight, like now sometimes you can just see a trade, a something happening in a pair. You just see a green bar or a green bar going up, straight, up. It's not coming down. You say, wow, too many buyers have come in, it's going up. That kind of trade, don't enter it. Don't enter that kind of trade. It's like a moving train that doesn't have brake. If you enter it, you have an accident straight. If you see a trade that is showing one bar, maybe you are in a 4-hour time frame, or you are in a 1-hour time frame, or 15 minutes time frame, and you see a bar, maybe a red bar, a bearish bar, or a bullish bar, just moving fast, moving very fast, up, or down, just one bar within that 15-minute time frame is moving like that. Don't join that train. Don't join that movement. Wait for it, because there must be a reversal. There must be a reversal. And the problem with such kind of trade, sometimes, if it doesn't obey any other block because of the pressure of the market, if it doesn't obey any other block, you will find out that as that bar is forming, it's going long. You say, wow, I missed this. It's better you miss it than for you to join it. Imagine when you just join it. I think you just join it and you joined it late, and the thing go the opposite direction. Instantly, you start losing money straight. And that kind of losing, it is fast, very fast. It will just come and clear and wipe out your money. And one bad thing about that kind of trade is that you'll be believing that it will go back to the direction you want it. You'll be praying. You'll be saying, oh Lord, let this trade go my way. Oh Lord, let this trade go my way. It's a lie. It will not go. It will not go. It's in fact, it's that time that it will start going up and break. And you know the worst part, you will now find out that and you saw this coming. You even saw the strategy and everything. Why was I not patient? Patience is a virtue in trading. Is a very strong virtue in trading. Be patient. Be patient. You see what I told you now? I said this is going to touch this other block and come down. Now, when you see such kind of things, what you do is you check if there's another block somewhere else that is hiding somewhere. Let's see if there's another block here. Okay, yes, I've seen one that has not been mitigated. There's one up here. There's another block here that has not been mitigated. So now this is the biggest problem in trading, most people that understand order block, fair value gap trading, they sometimes you see three order blocks, three fair value gaps. You'll be asking yourself, which one is it going to reverse from? Most times, if you want to know this type of thing, you have to use your Fibonacci. You see where Elliott wave comes in. Elliott wave and Fibonacci will help you to understand these things. Now, if I want to use Fibonacci to get this trade now, I'll have to go to a higher time frame, or start from this place that it did double top, I will triple top. I can draw my Fibonacci from there and say, okay, first of all, you ask yourself, this wave that is forming, which wave is this? You ask yourself, which wave is this? Because each wave has its Fibonacci measurement. You cannot use the measurement for wave 3 for wave 4. You must know these things. If you want to understand Elliott wave, you must know how to use your Fibonacci. And if I want to draw those type of things, I don't use 5 minutes time frame. I have to go to my higher time frame to draw it perfectly well. So for now, let's see what we are talking about. I said it's going to come to this other block up here, or the one at the top. So, but overall of this trade is downtrend. How do I know? On my 4-hour time frame, or even my daily time frame. There is a triangle, a major triangle I drew. You can see it, a triangle that touched each point. So it's a trend that is an ending diagonal. I call it an ending diagonal. Now, and this ending diagonal, I'm repeating it again. The ending diagonal forms 5 waves with A, B, C, D, and E. And immediately it forms that E. Most times the E doesn't touch the trade line. It will just hang at the middle or stop somewhere at this along within the space there, then move to the opposite direction and bust the resistance or the support line. Then later come back and go back up. That's what it does. Now let's go back to our 5 minutes time frame. You see what I'm saying? You see, I said it's going to touch the blue. There is why it's reacting here is because there's a break of structure here, so it's reacting here. So it's either it will touch the blue because there is a fair value gap from here, and there's another block here too. So yeah, John, hi, I can see you. Greetings to you, John. So we have to be patient and wait. We have to wait for it to get to this blue. It's just normal trading. This is just normal. But it's just that people are not patient. You are rushing. Where are you rushing to? Where are you rushing to? You can wait a whole day for a particular trade. In fact, you can wait for a whole week for a particular trade to click. You can wait for a month for a trade to click. And once you are able to wait, and because you are sure of what you are doing, once you are able to wait, you make a lot of money from it. Patience is key. Patience is key. Patience is key. Now this is just a 5 minutes time frame. You can see how it is delaying to go to that other block. See how it's delaying to go to the other block. It's just like that. It's That's how the trade is. You have to wait. Wait. Say, those that wait upon the Lord, the Lord shall renew their strength. It's even in the spiritual realm, you have to wait. There's what is called a waiting time. Wait. Just wait. But people don't want to wait. While you are waiting, make sure you don't sleep off when you are waiting. That's another thing. When you are waiting for a particular trade to set up to occur, or something you have planned, when you are waiting, make sure you are awake. Make sure you are awake, because sometimes you can say something that this trade will go and touch your other block. It might not touch the other block, but just touch the fair value gap and reverse, and it will never come back to the other block again. Maybe later in the future. So sometimes if you see such kind of thing, you wait. Be awake. Or you said you do your, what they call it, you come to your buy limit or sell limit. When you go there, you set, and when you are putting a sell limit or a buy limit, make sure you put your stop loss. I'll repeat again. When you are putting a sell limit or a buy limit, maybe you are saying that this trade will come to this place, and if it comes to this place, I'm going to enter a trade and it's going to go to my direction, maybe downwards or upwards. Make sure as you are putting the buy limit or sell limit, as you are putting it, put your stop loss in a safe place. Look at the amount you are willing to lose, that if you lose, it will not affect your capital. Make sure, I have said it again, make sure you don't lose your capital. Some people are taking serious risk. That's gambling. You don't waste your capital. Know what you started with. Protect your capital. Protect your capital. Both in trading and in real life business, always protect your capital. Because with capital, you can always start the business afresh again. In business, you must lose and you must gain. That's the truth about both physical trading and forex trading. The physical markets, people lose. People buy. You can buy tomatoes and say you are selling tomatoes, and people don't come if your supply is much and the demand is less. Most of the tomatoes is going to spoil unless you use the tomatoes for yourself at home. They will all get spoiled. So know when to buy and know when to sell. You must sell. There is buy and sell. You cannot buy and not sell. There was something that happened in the Bible. Joseph had a dream. He had a revelation of what is going to happen over 7 years, that there will be famine. He started gathering, because he knew that time had not come. He started gathering those foods. They started stocking food. They stocked so much food. But when the famine came, it was time to sell. Had he kept those things he was stocking, is either they get spoiled or they will be devalued. Maybe peradventure, that time of famine, there was no food anywhere, so things will be expensive. Maybe he would have sold some certain things. Maybe yam then. Maybe they had yam then. Maybe yam would have been, maybe if it was 2 penny normal, but because of the famine, it will now go to 10 penny. And you have the yam in your barn. You refuse to sell it when there's famine. The yam will spoil, or some animals will come and eat it, because if there's famine, the famine used to affect both human beings and animals. So that's just life. It's normal in life. Just like when people were hungry during the COVID-19, when there was no food, our government they carried palliative and went to go and stock it in warehouses without people knowing that something like that was existing. And most of the things they put in those warehouses got spoiled. Why? Because of greed. Because of greed. You have money in your hand, you don't invest it in business. You went to dig a hole to keep your money, to hide your money. Or you have money in your hand, you want to keep it somewhere. If you put the money in a place for a long time, it will have mucor. It will even start tearing. It will get weak and all that. So most times, if you buy something or you have a thing that you want to sell, if it comes to the time when you are supposed to sell it, sell it. If it comes to the time you are supposed to sell it. You can see what happened. It touched the line, it went to the fair value gap and reversed. That's what it did. If you look closely, if you zoom, you see that it has, in this green candle, it has already touched the fair value gap. Let's check the 15 minutes time frame. You will see what I'm saying. Now, that's exactly what happened. It can still go back up and do what it wants to do. That's trading for you. You just be patient. Allow you to do all the things it wants to do. Some people now will see this red candle now and might call it engulfing candle. You cannot call it an engulfing candle if it has not finished. If the time frame for that candle has not finished, allow it to finish. Sometimes it might come down like this and go back up and form a long wick. Automatically, that one is no more an engulfing candle. You can see there's a serious sell. You can see the moving average has crossed. It's going my way. Perfectly well. So it's just understanding. I had to wait for this trade for some days before entering this trade. I had to wait. Now, for you to see clearly what is going on, you have to go to a bigger time frame to know if it's going to touch an order block, or it touch a fair value gap, or it's crossing a support zone, or it's going to rest on a support zone. So you have to check the higher time frame so you can have a better view of what is going on. Now, this is a 1 hour time frame, and in this 1 hour time frame, this is where the order block is. This is where this green candle is where the supply zone is. You can see it's reacting towards that side. It's reacting. So you don't panic when you're entering trade. You don't panic. Some people now, because it has gotten to this order block, they're going to take up trade. They are going to buy. They'll enter buy, and they'll go bullish, and they might be cut off towards the side. Because the general, like I'm saying, if I check the 4 hour time frame, you can see I told you that this place is where I'm expecting it to break on the 4 hour time frame. This is the real break of structure. Those ones are called, the ones I've been showing you are called internal break of structure. Those are internal break of structure. For all these candles have break of structures in them in the higher time frame. In the lower time frame, it has break of structure. But in the higher time frame, you will see the real break of structure. This, if it breaks this place, then we know it's a change of character. That the trend has ended, and it's going to happen. You know why I'm sure? I'm sure because of this wave I am telling you about. Of this wave, this ABCD wave that is happening in this triangle. It must come down here. I use the word it must come down there. It must come down there. But it's not going to be a straight line. There will be waves. So entering earlier is better. See, I entered early towards the top. That does not mean that the markets cannot go back to that spot. It can go back to that spot and take me out. But I am on the 4-hour time frame right now, waiting for it to break this structure here. I want it to break this structure, and that's what I'm expecting. But my only barrier here now is this other block on the 4-hour time frame. See this other block here. Let me delete this one. Let me bring this one down. You see this other block here. That's where the price is reacting to now, right now. But the way it is coming down, it might disrespect that other block. It might disrespect the other block because it's coming down as a sharp movement. Anytime there's a sharp movement like this, most times, not all the time, let me say it's a 50-50 chance, it might not reverse back. It might disrespect the other block there. Why? Because it's trying to form, because the trend has ended. So let's watch out what's going to happen. We are on a 4-hour time frame. Patience, patience, patience. Patience is key. Patience is key. If you enter a trade in a 4-hour time frame, it will be difficult for you to just lose that trade like that. If you have a good sum of amount in your account, it will be difficult for you to lose that trade. It will be anything you see on a higher time frame is what it is. But if you see some things, some kind of movement in a lower time frame, it might be like a mirage. A mirage is those things you see when you are driving. It will look as if there's water on the road, and when you get there, you now find out that there's no water. That's mirage. That's something that is not real. So you might see a break of structure or a change of character in a smaller time frame. You think, wow, there's a change of character here. There's no change of character there. The possibility that is a change of character, it is 70% not going to be, 30% going to be, because it is not it's smaller time frame is good for entry, taking your entry. Why the bigger time frame is where you have to check your trade, your trend lines, and do your strategies and all that. I use monthly time frame to do my strategy, monthly and weekly to do my strategy, to take my set my setup well. Then I'll be doing that. I'll go to monthly. After I set it up, I'll check the weekly. After I check the weekly, I'll now check the daily. Then if they all correspond, those three corresponds with the 4-hour time frame correspond, I'll go to the 15 minutes time frame and take a trade. That's what I do. So we are seeing this trade now moving this way. Like I said, if you are going to sleep, if you know you're going to sleep, you can wait for it to, or put your stop loss above this double top. You can put it there and go to bed. Or you put it here, just towards the top of this last candle that is forming. How many minutes do we have? We have 2 hours for this candle to finish forming. So it's a long time. You can put it there and just enter, so that even if you sleep off, your capital is still safe. I hope you understand. Protect your capital. Stop loss. Well, stop loss. There's a loss in stop loss. So when you have stop loss, you have about 20 stop losses. that you have entered trade 20 times and it cut off in your, it cleared your stop loss. Calculate all your stop loss. It's waste because you have wasted it. You've wasted your. So instead of getting stop loss, why don't you say stop profit? Change it to stop profit. So it should be stop profit or take profit instead of stop loss. Sometimes I even don't put my TP. I don't put TP. Sometimes I'll just be moving, doing trailing stop loss. Once it crosses a boundary, a break of structure, I'll move the stop loss and it forms a lower low or a higher low. I will put my stop loss below it. I'll go to a smaller time frame and put my stop loss below it. That's what I normally do. Like now, if I want to put you'll be wondering, this candle that is forming now, it didn't make any lower low because this is H4. This is 4-hour time frame. I'll just go to 15 minutes and check where is the possible place I can put my stop loss. The place I put it is okay, perfectly okay. So I'll just bring this other block here and leave it here. So I will know that these are the places that the trade could reverse to. You can see the moving average 50 and 20, they've crossed each other on the 50 minutes time frame. It's a big sign of reversal downwards. You can see where it's facing downwards. For those that have been following me, I believe you took these trades because since I started talking, I was talking when it was still up here. I've been talking since when it was up here, even before it crossed, before this moving average touched each other, came close to each other. Now you are seeing it that this is for teaching. I'm just trying to teach the best I can to share my knowledge to the people that see my posts, my live view. Please share, subscribe, like. It's very important for me so that I can always come online to share my knowledge and to give secrets. I'm going to, when Bitcoin starts the overall movement of the third wave, I'm going to come online live. So subscribe and click the notification bell so that when I come online, you will not miss out. You'll be able to know that I'm online. Like, subscribe, and share. It's very important. I will not come online every day and tell you let's enter a trade. No, you have to study and check the trade before you enter. That's what we do. I'm not collecting any money from anybody. If you want to know personally, if you want to understand it personally, you can always meet me and we'll discuss. I don't like to speak plenty English when it comes to all these things because I know those English, they used to cause confusion, make people understand, break it in a layman's term that the person can understand. So that's trading for you. Trading. So I'm going to end this live section now. It's been a long night. Thank you very much for being here with me. I hope you understand. Let me just give a short explanation of all I've been saying. I said the general trade is a downtrend. The general trade, you can see that in the RSI, this is RSI at the bottom, the RSI, you can see that the RSI is below the 50%. And whenever the RSI is in 50%, below 50%, you know it's a downtrend. It's a downtrend. To confirm it very well, let's go to a higher time frame before you can say it's a downtrend. Let's go to a daily time frame. In fact, let's go to monthly time frame. You will see that it's a downtrend. You can see the RSI. You can see it is a downtrend. You can even see the moving average on the chart. You see it's facing down. I'm suspecting Bitcoin might get to 25,000. It might get to 25, 30,000, and that will be the perfect time to buy. When we have a confirmation, that's when we can buy, because I believe that this wave that it has been forming since it started from here to the top, to the highest top here, I believe is one. That's wave one. Then this ABC that has been forming, ABC that has been forming. This is A, this B, this is C, is the one that's going to form. And if it comes down, it's going to come down, because why I said Bitcoin is going to fall is because there are other blocks at the bottom that has not been mitigated. That has not been mitigated. Let me show you one. This is an order block here. There is an order block here. Let me use a box to do that. On the monthly time frame, look at, there's an order block here. This one here has been mitigated already by this line. This one has not been mitigated. Then this one has not been mitigated. You can see that, but now this one looks reasonable. And in that plot, you can see it's just about between 25 to $28,000. So I believe the trade might get to this spot, might get there, or it might come here to this, because there's a support here. There's a support here. You can see on this red here, it touched it, and here it formed. It was like a resistance. Here it became a support. Here it became a support. So I'm suspecting it might come to this support line here and go back up, or come down to this other block and go back up. That is it. Because this is a monthly time frame. Let's go to weekly. You see that what I'm saying. You can see the RSI is below the 50%. Let's go to daily. You can see the RSI is just above the 50, just close to the 50 and 70, facing down. And if you see, it has been doing bullish here on this daily. Now it has created a red bar candlestick, which I'm suspecting is going to form an engulfing candle here and cover this green totally. Just that little movement from that place before it becomes an engulfing candle is a very serious move. It's a serious move. So the best thing you can do, if you want to enter this trade now, you make sure you wait for a little reversal, a correction first, before you can enter. And enter on a 15-minute time frame first. Check your 15 and your 5 minutes to know the best spot where you can enter the trade. Look for another block on FVG. Allow it to finish the movement on the FVG or the other block. Get a confirmation like an engulfing candle, or is that an engulfing candle or shooting star? Those two especially before you can enter the trade. Thank you so much for being with me throughout this trade. Let me just mark where you can enter a trade if you want to enter a trade. If you want to join the trade, this is where you can enter a trade here. But wait for it to confirm for confirmation before you can enter a trade here. Good night. See you tomorrow.